Good morning. Welcome to Market Wake Up. My name's Jordan. This is John, and you're watching the one show that's going to get you up to date with everything you need to know ahead of your trading day. We're going to break down the macro mumbo jumbo and talk news and what's moving the markets. Without further ado, John, let's get into Market Wake Up. Good morning, John. Happy Monday. Another week, a new week to make more money. How you doing?
Yeah, I'm doing good, mate. Although I feel like I'm coming down with something now. Maybe the cold weather.
Is it another holiday syndrome?
Yeah, well, maybe. It's just coming down. It's one thing after another. Been very active lately in terms of just been here, there, and everywhere. Do you know what I mean? So did some moving in on Saturday, some house moving on Saturday, which was fun. Drove home on the night, so I didn't get back till late. Then went and watched the Villa yesterday, and they were okay. Drew 0-0, so it wasn't too bad. Wasn't the best either.
I think you guys should. Anyway, let's talk football later. I think you should have won that. I think
probably so.
Regardless, yeah.
Other than that, I'm good. Surprising NFP data.
Wow,
very surprising NFP data. I think for the market, which is interesting, and I'm sure we'll get into a lot more over the show today. But yeah, other than that, how are you? How was your weekend, mate?
Yeah, good. Got had a nice relaxing weekend, to be honest. So it's nice. The weather's been a little bit warmer, so I got some time out in the sun and down the beach and stuff, which was quite nice. It's quite relaxing. Nothing really to report. Tried to get away from work, but they won't let me. They won't let me, John. They won't let me get away. But, it just seems to happen. But no, I'm doing well. I actually quite enjoyed this weekend. And good morning to Musclay and to Paul as well. Guys, if you are in chat, give us a hello. Get chatty with us. We do enjoy actually communicating with you guys and sharing our different trade ideas. Yeah, let's talk about it. I'm going to say market leftovers, what's happened, but the reality, all we care about there is that NFP data, and wow, did it come out with a bang. One thing that also, because it's such a headline, a lot of people are skipping over is the revision from last month as well. If you have a look at the non-farm employment change, okay, which is saying you come in at 254. It was forecasted to come in at 147, right? Yeah. So they absolutely smashed it out of the park. But what I found really interesting is they revised the numbers from last month from 149 to 159. So they chucked an extra 10K on that revision as well, plus the massive beat. That data is suggesting that the jobs market's really healthy, to be honest. Like to not only beat on just this 1 month, but to also revise to the positive side as well. Yeah, I mean, it's interesting.
Interesting is the word.
Interesting.
It's quite. So I've been having a little look around just at headlines and stuff. Obviously, the headlines are, maybe we are getting the soft landing, even no landing now, essentially, in the US, which is supported the US dollar. Basically, the Fed aren't going to have to cut as aggressively, perhaps, as what was being felt. We saw, obviously, bond yields rise as well off the back of that. So dollar being a little bit supported here because of this. And it's just interesting, isn't it? Because what does this say to us going forward? Well, there's a real air of caution to data like this because you're getting mixed signals now, right? You're getting the Federal Reserve cutting aggressively because they're expecting the unemployment rate to rise to 4.4%, maybe even beyond that. They're expecting labour market struggles, right? So that's why they're cutting. Then you get a revision number that's higher, and then you get a big jobs number. I mean, we kind of said this from a seasonal perspective. NFP now should be increasing, right? Month on month now until sort of the start of the year. So in that kind of concept, it is still following that sort of seasonal pattern that we're very used to. But then you're getting the mixed signals from why the Fed going so aggressive in the start if what's going on? What is going on? Essentially, what is going on? That is the hard question to answer at the moment. It's a very hard question.
John, this show is where we provide people with what's going on. It's not where we sit here and just question.
Hey, I'm not gonna sugarcoat it for our viewers. I'm not gonna be the one here to tell them rubbish. Honestly, it's very difficult right now.
Yeah.
This is why my focus is kind of shifting away from the dollar a little bit. I'm focusing on other markets that make a little bit more sense to me, because the US dollar does not make any sense right now. We expected a bit of support coming from it. But then we've got elections rolling through. The election is very tight at the moment between Kamala Harris and Trump in terms of polling. So is this a great time to be an investor in the US dollar? And what does this kind of bigger picture, what does this spell for us? I think the dollar, obviously, if you look at the macro stats, right? The inflation rate, GDP, interest rate, they are still technically better than most economies. So I still feel like the dollar is undervalued for where it is on a grand scheme of things. But the market is really reactive to any kind of, if that NFP had come out worse, right, that dollar's tanking. That dollar is tanking. And that's the situation we're in at the moment. We're in a very reactionary area, I feel. So that's making it difficult to call long-term plays. That's what I'm trying to get to, basically.
Yeah, I agree. I'll share a little bit more on that kind of reaction and how markets pricing that in, because it does change things. A good job market now is making a lot of people think, oh, shit, we have soft landed. And that's interesting. Now, obviously, we've known, because we've chatted about it a million times, every recession starts with a soft landing. We've been kind of crawling. It's like we've stole something from the kitchen, right? Your mum's cooking some muffins and you've pinched one, right? And you weren't allowed them yet. And as you're just creeping away, every little creak, you keep thinking, oh, is she going to yell at me?
Yeah.
No? Oh, I might got away with this. And then we go another step and another creak. Oh, still nothing. How many creaks until mum cracks the shits? Like that's what I'm getting. Are we going to get away with this, or is mum going to crack the shits? And that's kind of the analogy I like there. And I'm going to share a little bit more about that in a second. Barish popped in saying, morning, German factory orders negative 5.8, predicted negative 1.9. So yeah, big miss. Previous 3.9 not looking good. It is. I actually had a look at a chart earlier today when it comes to the euro area surprises on manufacturing data, right? Which means which country had the most outrageous surprises and to what level. You've got like Spain going here rather flat. I think Italy was a little bit to the upside. Things were kind of moving. Germany was a downhill slope. It was like a ski slope. Like it was just progressively getting worse and worse when it came to surprises. And it was just like, boy, that's not pretty. And that actually leads into, I'll jump into this just before we get into market, just before we get into freshly squeezed, should I say. I'll let you go ahead and see the Euro Aussie dollar. Obviously, we've been looking to short that for a little while. Whoops. Sorry, wrong position. Euro Aussie dollar has actually hit my entry trigger. You can see a nice little pop up into the 161. So I am now officially going short on the Euro Aussie. It's hit that area I'm targeting down the bottom. So there's a fun fact for you. Talking on the Germans manufacturing problems that they're currently facing. Without further ado, let's have a quick look at where we're priced today. Let's get into freshly squeezed and let's get you through. The biggest one I want you to look at, VIX is uptick 2109. I'm going to leave one chart on the screen here, and it's my favorite. It's been my favorite for a little while. It's the US 2-year yield. There you go. Look at that. Look at that. That's going to tell you where bonds are pricing. That's going to tell you where people think interest rates are going. Look at that spike. Impressive. Now I'm going to run through the prices. I'm going to let you have a look at that US 2-year bond yield charts. Aussie dollar is flat. Euro is flat. Great British pound is flat. US dollar CAD 0.10. Pretty much flat. US dollar Japanese yen down 0.3%. Finally moving somewhere. The XJO is down 0.2%. The DAX is down 0.7%. The Nikkei is down 1.5%. The FTSE is down 0.5%. And the S&P 500 down 0.27% pre-market. Stock market's not enjoying whatever the news is this morning. They're not enjoying it. Coffee is looking at an uptick of 0.5% so far today. Gold down 0.16. Nat gas is up 0.3. Silver down 0.75. Sugar down 0.55. And oil up 1%. Bitcoin up 1%. Ethereum up 1.75%. But most importantly, US 2-year bond yields ran on that news on NFP yesterday. I keep talking about the gap between where the Fed sit, the Fed funds rate, and that US 2-year yield. Get out of it, I don't want to stock. The Fed funds rate, let's overlay it. The gap between these two are what we're looking at, because the bigger that gap gets, the worse it is. And as you can see here, the rally we had on Friday and continuing this morning is attempting to close that gap. The Fed funds rate is priced in. It's actually at 5% now, isn't it?
It should be, yeah. It should be around 5%.
But yeah, about around 5%, which will be about here. And you see the US 2-year yield getting a little bit closer as well, which might normalize conditions, which is strange to say when we have an election year where guys try to be assassinated twice. We've got 2 wars. We've got oil going all over the place. We've got commodities going, stocks breaking all-time highs. You name it, we've got it this year. And we might actually be getting to a point of normalization. What on earth did I just say?
I have no idea. No, it is. Yeah, it's crazy. I still feel like there is a recession on the cards. I still feel like there is something bigger. But when we say these things, it's not going to be tomorrow, right? It's not going to be next week.
It could be.
Well, that's the thing. It's hard to call a top in these things, right? It's like if you look at the S&P 500 at the moment, it's broken to all-time highs, but it's not having a convincing move above all-time highs, is it? It's not like going very, very aggressive, which is, again, is that kind of giving you a little bit of an inkling to what the positioning's like in the market? Are they seeing this as this soft landing? Don't get me wrong, the S&P on Friday did rally, and it kind of, on average, beat pretty much its whole last 2 weeks of ranges, right? So it did bounce off of that positivity, but again, it's not convincing me that there is a lot of underlying support for what's going on at the moment. And we have to kind of look at price is always the first to react. Okay, price is always the first to react, and then you kind of get the filtering on after that with regards to like your data sets and things like that. So I'm just not convinced. I'm not convinced at the moment. What I find interesting at the moment is the yen situation as well. Volatility has moved higher, but yen has weakened substantially. That was because the new PM, who was very hawkish on yen, completely flipped and turned dovish.
Who would have thought? Wins the election and then flips.
Then flips, says all what they need to say, and then they get into power, and it's like, well, okay, actually, I don't really mean it. How many times have we seen that in the past? So that's also a very interesting market to look into, because obviously I would be looking to buy yen in situations usually like this. So like I said, very difficult conditions at the moment. There's a lot of headlines everywhere. There's a lot of geopolitical risk going on at the moment, escalations here, there, and everywhere. There's the elections coming up. I still feel like there's a good play that volatility is going to rise. If I'm looking at anything at the moment, I'm trying to look for areas where I feel like there's decent growth to be had. I feel like commodities could be that area, especially precious metals now, especially with the stimulus from China.
What's interesting?
Yeah.
Really, because obviously the stimulus from China is fantastic, and this could have a delaying effect with the poor numbers coming out of China. Huge layoffs for mining companies here in Australia at the moment.
Is that? I did read something over the weekend about, is Australia in a little bit of a bubble right now?
We've been in a bubble for 6 years. So
well, yeah, because your house
if you're turning your housing market, it's just that's longer. I mean, you have a look at debt to income ratios; it's just phenomenal. Like, yeah, without a doubt, that's a problem. But we've had that, like, the growth 20 years. We've had that problem, and it's still going. Waiting for it to pop, but it seems to be made of cement, and it doesn't pop. But one thing, like, I think that's really interesting is, if our mining sector slows down, that's big. That is Australia as a whole. It's our lifeblood. It's the mining. Now, I know a lot of people like to go green, as we call it these days, and go environmentally friendly and stop mining and stuff. But let's be realistic. It is what runs our country. It is what makes us money, and it is the only reason why we are Australia at the moment. And if that lifeblood does slow, which we have seen in the past, it does lead to bad GDP reports. It does lead to bad economic standards. With the China slowdown, the problem, that's been a big warning flag with the Aussie dollar. The stimulus should boost it, but seeing some large mining companies do major layoffs, I'm talking thousands of people layoffs, it is a bit concerning.
It is interesting, though, isn't it? Because you would have thought that with the price of commodities recently, with the price of metals and things like that, they have been moving higher. So there is this general
iron ore for 2 years
down for a while, hasn't it?
Yeah, and that's how big iron ore and coal are our biggest exporters. And because China's not been doing stuff, we're getting the bottom end.
Maybe, I was going to say, maybe there's a lagging effect here between what's happened in China and globally now, and Australia is probably going to be the next one, which actually kind of brings me on to our big bite for the day.
Ooh, we're gonna change it up, are we? We're gonna get into the big bite.
I want to get into the big bite. And the reason why I want to go to what I'm going to talk about next and looking at sort of commitment of trader reports is because of the chaos that is headline news at the moment. So I want to be looking at sort of areas. What are the hedge funds doing? What are the commercials doing? What signals are there around at the moment? We've had some interesting signals recently. One of those being the Swiss franc, right? We were looking at a potential signal short on the Swiss franc recently. Started to see that start to play through now. We've had everything kind of come fold here. We've got commitment of trader signal short. We've then had the Swiss National Bank coming out basically saying that they need to cut interest rates further. So we're starting to now see this little bit of a flow from the Swiss franc here, and that's something that I really like. So I wanted to take a look at what's going on from a commitment of trader point of view. Now, you might not necessarily be too happy with this one because the Australian dollar is giving a little bit of a sell signal. So you might not be enjoying this one. Now, again, when I talk about COT, remember, COT is a lagging indicator, right? The report's made on the Tuesday. We get it on a Friday. But it does use sort of weekly charts as well. So this isn't okay, go and sell it tomorrow. This is okay, let's go take a look at the price action. Is it giving us the same sort of feelings around the market? But really interesting data that I'm looking at the moment, especially when it comes to the non-commercial, so the hedge funds. Hedge funds at the moment now back into extreme longs on the Australian dollar. Now, typically when they do that, we often see them either reduce their positions, right, which can lead to a little bit of selling coming in, or we can see, complete reversals. We usually see a reversal when the non-commercials are at an extreme themselves. We don't have that right now. So I'm looking at maybe a little bit of a short-term flip in the Australian dollar in the very, very near term. And that's because of where the non-commercials positioning, the hedge funds are positioning themselves at the moment. Typically, when we see them come up into these types of areas in the past, so above that sort of 100K level in long contracts, you can see the price action has followed, which has actually seen a little bit of a sell-off in the Australian dollar. And this would be your sort of Aussie US dollar chart. I always try and match this up with where prices are at the moment as well, and we can see that we are kind of in and around these highs. Okay, so that's just if you're looking at it from a support and resistance point of view in itself, you're at these large weekly highs. We know that often we can see some short-term reversals from there. So I am liking a little bit of downside on the Australian dollar at the moment, only in the very, very near term. If we go take a look at Aussie US dollar, for instance, this is that move. We started to see a little bit of a flow of that sort of selling pressure coming in at the moment. But, I still like, from a fundamental point of view, the Australian dollar is being bullish because RBA is not really interested in cutting rates at the moment. Obviously, what you're talking about earlier is a little bit concerning in that kind of point of view, because if that does start to flow through, then there could be some significant changes there, right? So it might only be a short-term pullback for a continuation. Our currency strength meter at the moment is still saying that we should be buying the Australian dollar. So I'm basically looking for some short-term plays into areas of sort of demand. So you've got these areas down through here around about the 66, 75s, maybe even this short-term area here at 67.36. I'm looking to see, can we get a little bit of a move down into this sort of area, maybe a little bit of a rebound higher. And I think if the Aussie US dollar is at an area of support, you can go and look to try and trade the Australian dollar elsewhere against other markets. One of those that I've been keen to have a little look at recently is the Aussie Swiss. Now, looking at the price action here at the moment, I wouldn't say that's necessarily, bullish right now, or makes me want to be a buyer. I want to see, can we get some sort of areas down towards this 57.20s, maybe, this little area down through here where the market stalled for a little bit before being bullish again. So I like the Australian dollar in the midterm for a little bit of bullishness, but right now looking for that short-term short play, because the non-commercials and the hedge funds are starting to take some profits off the table, being in these little areas here. So that's one that I like. Thoughts on that?
No. Look, I agree. I think when we look at the Aussie dollar US dollar chart and we get a gorge for like the sell-off, I think that's predominantly driven by the surprise NFP data. I mean, you look at US dollar across the board, we are still seeing weakness. Even Euro Aussie dollars uptick. That's what has pulled it into that short area for me. That little bit of weakness in the Aussie dollar and in the really across the board in the commodity currencies. You're seeing the same thing as you've pointed out there in the Swiss franc as well. I would be a little bit concerned if your COT reports are sending it and this isn't just a pullback, but this is rather a change of pace, because I'm waiting for a pullback so I can get in, but I also don't want to be caught if the tide's changed, right? So that concerns me a little bit.
And that would be, I think, if we saw commercials shorting aggressively. So they're not really at extremes right now. If we look at sort of where they've been in the past, it's been a lot higher on the short contracts, where you've seen these big changes in terms of where the currency's been in the past. So, that's like 105,000 contracts on the short side. Up here is 140, 160k. We're not really in that zone, and you can see it has fluctuated quite a lot recently. So I don't think we're at an aggressive or an extreme that's going to suggest a complete rollover. It's not like what we've seen before when we've looked at sort of CAD, right? So when we were looking at the Canadian dollar and we were looking at the futures chart there and the positioning, when we looked at the sort of long contracts coming in from the commercials, they were at levels we haven't seen ever, in history, really. And same with the non-commercial positioning as well. They were at the highest short contracts they've ever been in history. So that's when you get a sense of, okay, we're going to see a big turn here. And I don't see that with the Australian dollar at the moment. I still feel like, yes, we've got a short signal. I think that just means that we're going to see a short-term pullback, but bigger picture point of view, I still feel that the Australian dollar is probably a good place to be against most other currencies at the moment. I mean, if you look at Aussie Kiwi chart, this is very interesting because we do have.
New Zealand dollar right now is the highest interest rate out of the majors. They hold the highest because it's 5.25, I think it is.
And they're forecast to cut this week.
Okay, is that
by
this week?
50 basis points, right? To 4.75%. And I was looking at Aussie Kiwi because I was coming to this chart because currency strength and weakness was saying, I should be long Aussie Kiwi. So I was like, oh, okay, I'll go take a look at the chart. And I was like, wow, I haven't actually been. I've kind of ignored this chart for a little bit. And the market has, springboarded and rallied, especially when we broke above the 1.0950s, which again I quite like. I was thinking, okay, well, where do I want to be a buyer of this market? It's not here, right? That's at a high. I don't want to be buying there. I want to be buying back down towards these lows. So yeah, still quite like this market because we've seen quite a significant shift in the New Zealand dollar recently. So that's something I'm also kind of taking into my mindset going forward. Kiwi is actually seen a big move across the currencies. It's actually one of the biggest losers of last week. So maybe market starting to price in these cuts now from the RBNZ, which is kind of interesting to me.
What's it? Sell the rumor, buy the news. Let the cut come in and buy up the New Zealand dollar.
Well, we'll see what happens. It depends what their language is, right? If they're going to then go, okay, this is the start of our cycle. Say again?
They speak English.
Are they? Do they? I thought you guys had like a little war going on, like in terms of just
a war,
not a war, but a hatred, hatred,
rival. Yeah. I think it's a friendly one. I think it's nothing like England versus Wales, for example, which is probably a little bit more hostile. It's but we like a bit of banter.
Oh, okay.
Yeah.
Sorry,
that jokes are coming out on a Monday. I agree. Look, it really does depend on what the RBNZ say. Looking back on Friday, looking at those kind of expected rates coming into January, I couldn't find the data on the RBNZ. So I've got nothing to get through the futures market to really find out there. But we do know the ECB want to be down 100 basis points, and we do know the Bank of England want to be down 100 basis points, and we do know the Fed want to be down 100 basis points. I question whether the Fed still want to be down 100 basis points on those. I need to rerun those numbers after NFP, because with the US 2-year bond yields running, it tells me that people might be like, hold up, don't cut anymore. We might be all right. And that's it's just another spanner in the works. Another just completely changed the macro perspective in one day.
Do you think that's the danger? The danger is that they don't cut now.
It's definitely heavily priced in that they will. Absolutely. Yeah. If anything points to them not cutting like we did, we will see a reaction like we have. I mean, oil's up. What was gold's reaction? Really relatively changed.
Kind of flat.
Silver saw a little bit of bullish and then sold off. Oil's up. Bitcoin's up. Yeah, US dollar strength. That's really what we saw. Essentially, yes. If we start hinting at zero cuts, I think everyone's priced in that cuts are cuts and they're coming. If the Fed change their language and go, hey, actually, we might hold for a little bit, that will surprise a lot of people and it will change. Luckily for people like you and I, John, we're not exposed to the US dollar because we're smart. We're smart cookies. We've gone, this is horrible. I'm not getting until late November, at least. I don't want to touch that. But I am seeing, obviously, that weakness that Barry's alluded to there out of Germany is adding to that. I can understand my concerns now with Aussie dollar strength. That's the other half of that play, right? And it is a good half of that play. It might be worth maybe diversifying where I can allocate that. I want it to be in a commodity currency who aren't performing strong right now. Even the US dollar CAD is not performing that well. So tough point, but I guess one take it to go that I'll leave everyone with kind of a thought process, right? Just a little thinker is really what we've seen in that oil chart. We've spoken about it a couple of times. Today is October 7th. That marks 1 year after the terrorist attack in Israel that everything has begun from, that we're talking about today. There is fears that something will happen again today, and just as a message from other parties involved in this war, oil's starting to not like this, and that's something we discussed for a little while. We the fight with Hezbollah and Israel and the IDF doing different things. Oil was kind of like, it doesn't affect us. Iran obviously sent all those missiles, 180 or whatnot it was, to Israel. Oil went, hang on, this may affect us. And it's been rallying since. I mean, you can see the chart. It's not a convincing rally, but I mean, it's more buyers than sellers, and that's all you need to know. People want to buy it, people don't want to sell it. And the OPEC have also given a target of $90 a barrel, which is pretty far away from where we are. If you want to kind of get an understanding of what OPEC is, it's like a gang which controls oil. And essentially, they're like the RBA or the Fed, right? They say, hey, we want to get the dollar to here. They're going to do all they can to get the dollar to there. When OPEC say, hey, we want to get the oil prices up there, they're going to do what they can. They control supply. They control most of it around the world. They're going to sit there and go, we want to get it there. Let's get it over there. So they're going to jump on the back of this kind of war situation as much as they can to get oil to $90 a barrel, which leads into that kind of that little risk teaser treat thing I gave on Friday with that part of being my long-term October plan, being exposed to that. Without further ado, John, we have run out of time, unfortunately. Is there any parting words you wanted to leave everyone with today?
No, not really. Stay safe. Ignore headlines.
Full of energy.
Go
Full of
learn about
energy.
reports.
Yeah, I love it. I love it. Guys, take care. We're going to be back tomorrow, 8:30 a.m. British Standard Time. If you're interested in Louise Bedford and Mind Over Markets, her first video is going to go live on her channel today. So make sure you're following the Mind Over Markets channel. You've hit subscribe, you turn the notification bell on. We'll be back tomorrow, same time, to do it all again with another big bite and some more analysis just for you guys. Stay tuned, and we'll see you soon. Cheers.